Hello, everyone. Hope you had a wonderful and green trading week. There's been a lot of events that have taken place this week, actually, with regard to what's happening with the supposed and alleged positive developments in the UK Brexit talks with the European Union, and then also the apparently positive interim trade deal with China that could possibly be happening, which has obviously thrown a whole bunch of volatility into the marketplace as of late with regard to dollar, gold, crude oil, natural gas not really even touched. But then, of course, you have the indices that are seemingly getting themselves ready for a pretty strong rally as we head into the end of the month. So we'll see what happens with that as far as that's concerned. Let's go ahead and just jump in what's happening with the dollar. Now, the dollar, I did have it to basically go down this week. Basically, it did so, but initially it was pretty strong. So, to keep all things as transparent as possible, let's go to our 4 hour time frame view and just take a look at what happened. So, again, when I did my video, I was looking for the dollar to essentially come up into that 98.75 level, and we actually exceeded that mark, went up to around that 99 level, just shy of it, around 98.95, and then we began that pullback process. And again, Friday, we saw the pound rally on these alleged positive trade talks with the EU. And I say that way because some of you that have been following me for some time know that number one, I am not a trader that bases their moves off of what's happening in the news. I use the news as a gauge of sentiment. Right now, and in my point of view, and from some of the things that I've been reading over the past several months regarding the whole Brexit situation, is in my opinion, I strongly believe that they're going to be crashing out of the EU. There will not be a deal that's made. If there is, I'll be very, very surprised because the way I see it, it just all the facts that I've basically seen leading up to uh, this whole October 31st deadline with the EU Brexit trade deal timeline doesn't really look good for a deal to be made. There's way too much that happens, and we saw, and just to kind of remind everybody and to kind of just take a pause with the analysis here. If everybody recalls that it's been paying attention to the whole Brexit talks, what we've basically seen is a similar type of a replay of what happened when Theresa May was dealing with the EU, and they came out with this 2 year situation where they were coming up with this deal and everything looked great, and then she brought it to Parliament, and Parliament, all of a sudden, the politics got involved again. And what happened again? Nothing. Ended up having where Theresa May resigned, we got Boris Johnson in play, and then now the same type of a repeat story is continuing to go on. So either you play along with the fantasy or you stick to your guns and understand the reality that is the politics will probably get in the way again, and we'll see the UK crash out of the EU. Would it be the worst thing in the world? Initially, it's going to hurt, but I think in the long run, it'll get better. It's kind of like a breakup talk that you have with, your significant other. It's going to hurt a little bit in the beginning, but then later on, it's going to get better, right? I mean, of course, that's the way it works. It's like anything else in life. To make the hard decisions, sometimes it's going to hurt a lot. But if you quickly pull that band-aid off and start doing things the right way, life gets better, and so does relationships, and so does economically speaking, with different nations. So let's go back to the analysis here now. In light of everything that I just discussed with the UK and trade talks with China and all that stuff, it is going to be putting in some uncertainty here within the near term dollar expectations. So as far as the daily, let's go back to that because it makes things a little bit easier to see. So basically, as far as what I'm seeing here on my daily time frame, looking at the recent highs down to the lows and so on and so forth, we're basically at the mid fib level, which means awaiting decision time. So if the pound does in fact continue to strengthen into the end of the month here, which again could happen, depends on how hard they got that PR machine pumping. And as most of you know, a lot of algorithms, or most of algorithms, are based off of keywords that are triggered by headlines, and that's why you see those insta flash crashes or insta flash gains or breakouts, whatever you want to call it. That's why things happen that way and so quickly. So again, looking at this overall price action maneuver, you can see that again we pulled into the mid fib level here, which is around that 97.90 level. Was expecting to see this happen. Again, I was a little bit off on the top part of here, but that's okay. Made adjustments for my members and myself, and we took advantage as best as we could along the way. That being said, looking at the daily time frame view, I do expect to see, okay, a little bit more of a bounce back here in the dollar to probably around 98.20, let's say, and then looking for pound to retest the highs. If she continues to push it, it's going to put added pressure on the dollar, and then we'll be looking for again dollar to probably fall down a little bit more in the interim into that 97.345 level. However, if the pound fails, right, and so here's where this whole complicated imagination type of a situation comes into play. So you have to think not only about one level of contingency, but another of contingency, and then contingency off that contingency, etc., etc. So planning ahead for a situation like this is quite, let's call it insane, right? So in the event that we do have, and let's just go ahead and make this a little bit cleaner so everybody can kind of see what I'm looking at here. So basically, you have price action that's kind of pinned underneath of that trend line, right? Just to kind of keep it visual in nature, and so that everybody understands what the hell I'm talking about, even though some of it might seem like rambling. So again, have interim support around this 97.90 level. Let's call it that. Looking for a bounce back up here for the dollar, aka a little bit more of a pullback in the pound, right? So, depending upon what conversations or headlines come out over the weekend here, that'll impact the pound and then also the dollar as well in that inverse relationship or that matchup. So, again, looking for a little bit more of a pop up here around that 98.20 level, let's call it that. If in fact we do retest with the pound and break, then we'll be retesting around 97.37 area for the dollar. In the event that we do end up seeing that maneuver, then we'll be looking for a pretty dramatic pullback. In the event that we do get a crash out Brexit at the end of the month, then we'll be looking for a rally probably above that 99.50 level. And I'll go ahead and zoom out for the target here. Weekly view once again. In the event that does happen, then we'll be looking at, again, a stronger move up into the 78.6 fib level, which I think that will probably top out at that level around 120 to around 130. Again, that is assuming that we do have a Brexit situation. That would basically mean that the pound has crashed and that I'd be pulling back. So that's what that whole reasoning is behind that situation, or that price action maneuver, however you want to call it. Conversely, let's say that by some amazing situation that they actually get a deal with the EU, then we'll see continued pressure on the dollar, and then we'll be looking at a further resumption of this downward move back down into around 95.14 or so. So basically, the strength to the upside, you can add that to the downside and probably even take further pushes down of the price action down into around 93, down to around 92.82. So again, what strength you have going to the upside, you basically take it, reverse it, and that's what you have. And no, this is not a a rap song or whatever. It is just legitimately price action. And I try to be a little bit stupid funny here and there, but it is what it is. Just trying to. This is not a very exciting field. I mean, if you're here for excitement, you should just quit, go to the casino, put it all on black, and just let your money go, right? Here we're doing strategic calculated risk and planning and stuff like that. So this is not for excitement. This is just strictly for money. So again, this is the situation here with the dollar. I'm spending a lot of time on the dollar here because, again, I expect a lot of volatility coming in the upcoming few weeks or so. And just to let everybody know, again, it is getting to be hunting season. I do go away for about a week every year, and that is going to be that first week of November. So I'll let everybody know next weekend exactly when I will be away, when I will provide my analysis, and when I will be returning and providing analysis again towards the general public. So I'll keep you all posted on that part. So as far as the dollar, again, a lot of craziness happening here. Again, near term looking for a little bit more of a bounce here around that 98.20 level possible, and then we'll be revisiting the lows from Friday, and then we'll see what happens as we head into the end of the month here. And I'm going to put these on the larger time frame. That way we can keep the chart relatively clean. And that should keep us looking pretty good in the near term. Okay, so that's what I expect to see here, at least a little bit of a bounce at a 98.20, and then we'll just lock it up at that. And then the if and situation, pound continues to strengthen, pound weakens, then we start going up into that direction. So I'll just save that for our references for the next video that I provide. Let's move along here with gold. And again, with all this craziness happening, multiple things are happening geopolitically. We have Iran that's basically silent right now. We have Turkey that's in northern part of Syria. North Korea has been relatively quiet. We have the trade talk deal, and of course the Brexit situation that we're dealing with. So again, we had a little bit of a dip and rip on this past week here, but again, the Bulls just continue to get slaughtered here on this play. Broke down from the range here, but still generally looking okay. Again, the range is just a little bit wider at this time now. So basically, or shifted, I should say, is probably a better word to say. Shifted the range. So again, we have top side resistance around that 1500 level, still continuing to be a beast to deal with. So as far as gold is concerned, in the near term, I do believe that we'll again probably revisit close to 1497, 1498, and I'll drop down in a second to the lower time frame. But again, 1500 retest not out of the question, but I do believe 1497-ish area is probably going to be where we end up topping out here, and then we'll end up pushing back towards the lows here, 1478, with a possibility of retesting down near that 1467 level. Again, if you want to know what gold is doing and where it's probably going to be heading, follow what the dollar yen is doing. So that's your tip. So again, probably see this general channel being completely covered as we see a lot of volatility coming in the mix, and God knows what kind of wild card events we're going to be dealing with as we head into the future. So basically, just watch for this to kind of trade within this range, generally speaking, and then we'll see if we can get that upside when we get that upside move. Because I don't believe it's a matter of if. I do believe it's a matter of when we get that continued upside move, just given where everything is on a monetary basis, stimulus basis globally, continuing to see global slowdown, and it's just a matter of time before things readjust back to, again, normalcy. So looking at our weekly time frame view, you can see again, 2 weeks ago we had a very, very strong week. Last week we had a pretty good bearish engulfing situation here. We overtook the entire main body and pretty much had a lower high and a higher low. So again, leading to that credence of range trading a little bit here before we get that move to the upside. So again, the main message here with gold is going to be that I'm looking for a range between that 1478 level, I think I just said, down to around maybe 1468 possibly, and then we'll see price action come in once again to the upside. Who knows what kind of a curveball event we're going to get, but the main message is still generally bullish on gold, even though in the near term I do think it's going to be quite volatile and choppy. I think that towards the end of the month we're going to see prices come back up into those 1540s and then onwards up into 1800s as we proceed into 2020 with more and more chaos, and who knows again what kind of global events we'll be dealing with at that time. So that's what I see here for gold, dollar. And I know I spent a lot more time on today's video than I normally do, but I just figured it was a good idea to kind of give everybody some kind of solid backing or reasoning as to what is happening. So here we are with crude oil moving along with the analysis. Again, I expected to see the price action kind of hold around that 54 level. Then we had all this garbage about the positive trade talk development, interim deal, whatever fantasy and make-believe land you want to live in. That's basically what we're dealing with right now. So the algorithms are having a field day, running price up and blah, blah, blah. So, and to keep it short, simple, and sweet for the rest of the video, Again, the trend is still to the downside. Okay, global growth is still the main story here. In the near term, we have this algorithmic nonsense move where we're basically pushing back up here into a 55.40, 55.50 level before we do go ahead, reverse, and push right back down into that 47.60 target. I'm not changing my downside target. Upside target, increasing it just a little bit more here. I do believe that it does have a little bit more gusto. 55.50-ish area. Is it possible that we squeeze a little bit higher? Sure. In the event it does happen, the next level that you should be watching here is around that 56.50 level. Okay. None of these prices are sustainable at these levels up here just because of the fact of the true growth or oversupply issue, however you want to phrase it, still leads to cheaper oil prices heading into the future. 50-50 down towards longer term 47.36 as we head, months out into the future, probably 2020, but we'll see. Things change pretty quickly again. You get that Brexit hard crash, all of a sudden you're going to see bearish headlines coming out again. Fail to get a good trade deal with China, you're going to see bearish headlines coming out again. Or, if trade talks continue, just basically falter, then tariff starts getting thrown around, and crude oil tariffs are going to be implemented, and you're going to see just chaos and selling pressure coming in like no other again. So that's basically what we're dealing with here. This is the world that we're trading in right now and investing in right now. So it is very, very subject to what's happening with the headlines, and I'm not going to repeat which ones they are because, again, it's just overkill at this time. As far as natural gas is concerned here, folks, and let me just adjust this trend line a little bit here. Natural gas has just been continuing to be as weak as it can be. Was expecting to see some bouncing action. Haven't really gotten anything out of this. We did get a nice little rally up and around 2.398. Beyond that, it's just been a continuing downward trend. It just continues to push to the downside. Now, in the near term, I should say, I'm just going to adjust this a little bit here. I think that there's a possibility. I don't give it a lot of weight, okay, because I'm still overly bearish on this one as well. I think we're going to go sub 2 as we head into the next few weeks or so, but I'll get to that in just a second. So maybe 228 to 2.3 as far as a bounce is concerned. Longer term, and let's just go back to our weekly time frame view, you can see that we're just continuing to just push to the downside here. Once we crack below that 2.16 level, I think it is on my lower time frame view, we're going to be easily challenging that 203 level that we hit just a few months ago. So again, after that gets hit, I do reference back to what I said, few months ago, which is, once we do break 2, pushing down towards 190, no problem at that time. And then after 190 cracks, and it will, we're going to be going for a double bottom test here on a longer term trend down to 1.67 to all the way down to 1.6. So I don't think that we're going to be seeing any type of strong rally in natural gas. I think that basically the rally that we had here was just a retest of my 23.6 fib. Looking at my monthly time frame view, I don't know if it's actually still in play on this template. No, it's not. But on my other template, it is basically, and we could even hit it. That's how weak it was. It was basically right where this 2.758 level is, or 2.8. I can't recall off the top of my head at this time, but basically this does look like it's pretty well in alignment with my other template where that fib level is, that 23.6 fib. Now we basically pushed back into the mid fib level, if you can imagine it. And then we'll be looking at the base level of that fib around 1.6. So bearish on natural gas, continuing my longer term target 1.6. I'm going to say 1.63 to 1.65 just because it doesn't have to necessarily hit it directly, and it might end up exceeding it. Who knows? Might end up pushing down lower. I mean, it's possible, sure, but I think that for our purposes here, pretty solid bet is to see that 1.6, 1.65 level hit. Near term, maybe maybe a bounce up into around 2.28 or maybe 2.3, whatever it may be. probably a good idea to enter in, and that's what I'll be looking at, is a short position entry. Risk reward ratio phenomenal at this point. I mean, if you can get in around 2.3 to 2.35 even, and just wait for the price to kind of roll back around, and it will, down to around 2.16, break that level, then of course it just starts plunging. You'll be down at 2.11 no time at all, and then beyond that 2.03, and then so on and so forth. The only thing that could really change this trend would be maybe a trade deal. It doesn't seem like natural gas is really getting any type of benefit from the trade talk situation and the positive hype. It seems like it's just strictly doing its own thing, which is nice because it gives you a break from all that jargon. So again, might be an area to take a look at for some of you that don't normally trade natural gas, if you want to avoid some of the headline crap that's taking place out there. In other words, I do wish you all a wonderful and green trading week. I hope that this video was a little bit more informative for all of you. And as always, if you have any questions, comments, or concerns, you can reach out to me directly, thetradersperspective@gmail.com. My contact info is listed on the before and after parts of all of my videos. And to see any of my previous analytics, I do have the whole playlist saved according to um, the same title. That way it's easy for everybody to follow what I've been saying week to week, month by month over the past several, well, I guess the past 2 years now I've been doing this for the public. So anyway, green trades to you all. Hope you enjoy the rest of your Sunday. For all of the football fans out there, hopefully your team wins, unless it's playing mine. I'm not going to say what that is because I don't need to have the have the hate. But yes, I am in the Philadelphia area, so you can pretty much put that together. So, not that I think that they look good this year. I'll just put that out there. Anyway, again, green trades to you all. Be well, stay safe, protect yourselves, and try not to get caught up in the drama.